Good morning, good morning, good morning, everybody. Today is on the 9th of June. It's on the 9th of June. We were looking for buys on this above this point and sells below this point. So you see, eventually everything has come down to the sales could have worked eventually. It took some time, yes, but it took some few days of um what do we call faking outs over here, over here, over here, and then eventually went down. The buys as well took some days to do fake out, went up to take profit one and two, and then initially went up and covered. So what you're going to do is check how this week is set up to be. Monday the 9th, today we have nothing big on the dollar, nothing happening. Tuesday as well. Wednesday, we have the CPI on the USD. That's going to move the dollar, definitely the CPI. Thursday, we have the PPI happening. Friday, we have the prelim UM consumer sentiments and the expectations as well. So we have Wednesday, Thursday, Friday to look out for in the New York session. For this, I'm going to remove everything over here and then we're going to start a fresh whole new analysis again. You know how we do it. All right, so weekly high over here. So what we're doing is price action based on market structure. We're going to identify the support and resistance area so that we can look for breakout trades that you can be able to seize during the week or even today. All right. So first of all, identify the highest, which is the higher point in monthly high over there, which is April candle. Monthly low, still the April candle. Then we're going to go down to weekly, identify this candle as the high over here, weekly high, and weekly low at that week over there. Then you're going to go down to month to daily. When you're down at daily, see we have a formation of a new high over here. Yeah, no. There's a new high that formed over here. And then there's a low over here. All right, so we can't ignore those two. All right, well, 4 hours, what we have is basically this is not yet a low because this candle has not closed. When this candle closes and the next one starts from here, then this is going to be a support level. But as it is right now, this is the 4 hours low. We go down to 1 hour. 1 hour. We have this high over here. We are looking at the most immediate high. I know this is a high of oil, so we're not going to ignore that. We're not going to ignore that, and we can't ignore that point as well. So, but this is what we want because remember, we're doing price action. So we're looking at what is the action that the price is making. So should the price start moving down, what is the next possible action? We expect rejection at this point, and that is what becomes the most immediate support and resistance levels. All right, the support levels. Okay. We go down to 30 minutes. I'm gonna do that as a final. I know. Now on 30 minutes, we have again this high over here. That is where the candle is. Again, this candle has this one tried, got rejected, this one tried, got rejected, this one tried, got rejected. Now we're currently on this. And I think I would like it to come below this point over here. Again, that's where I'm gonna put that below that week and above that week, those week over there. Yes. So here we're gonna get two types of order: potential, aggressive buys over here, and then potential buys, the safe buys. Actually, it's potential buys here. Again, over here, you're gonna be having a potential aggressive sells. And over here, you're going to having potential safe sells. Right? See the way I've divided that? Again, like I usually say, the aggressive bit means that it's either a very small place that you need to execute impulsively, or it's an area that the chances of winning and losing, it's almost the same, right? That's why I call them aggressive. It needs you to be very, very aggressive with the market at that point. If it's executing, you're executing without thinking twice. You just in the market. And also, if you're when you're getting out, you need to also to not start asking, oh, should niwache ikaenda? No, you need just to be very aggressive with the market at that point. That's why when I give you aggressive entries, potential aggressive entries, yeah, that's what I mean, basically. All right. So this is what basically I'm going to, I mean, the aggressive, you can, to be honest, you can actually ignore the aggressive bits because it's not really giving though. It's quite small and I don't really think it's, well, let's see. Like, let's so for example, if you take an aggressive buy over here, there's like 7 pips. Yeah, 7 pips to go to the take profit. It's quite small, yeah. Over here to again 7 pips. So you could take the potential buys and sales over here. All right. But again, if you want to do aggressive, if you're a scalper or something, that someone that doesn't really mind taking small orders, can always go for that. Again, what I told you last time is I usually do analysis based on every type of trader. So I start from the monthly, I come down weekly, daily, 4 hours. The reason being because I know there's a lot of people that watch this analysis and there are different type of traders. Some are scalpers, some are swing traders, some are day traders, some are position traders. So I try to cover everybody in one, right? So it is what it is. This is what we're gonna be looking at this day, and yeah, pretty sure this week is gonna be great. We have CPI, we have the PMI, we have the prelim UOM consumer sentiment happening. That is Wednesday, that's the Friday, respectively, and it's gonna be moving the market for real. I know that. Okay, now take care of yourself. Take care of your account as well. Risk manage your account well. Trade what you see, not what you think. And let's meet here tomorrow. We do a review on the same. Good luck, everybody. Happy hunting. Right. Bye bye and have a great week ahead. Bye bye.